Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Martin Walter. Martin's president and CEO of Treasury Metals, which can be traded as TML on the Toronto Stock Exchange. Thanks, Martin, for being here with us today.
Well, thanks, Jeb. Always a pleasure to catch up with you, and always great to talk about what's happening at Treasury Metals.
Treasury Metals is a unique company. We've seen a lot of interest coming back, especially into the Canadian advanced junior gold mining assets. We've seen some recent M&A. We've seen some big investments from major companies. Talk to us about Treasury Metals' Goliath Gold project, which is working on a feasibility study and is advancing permitting.
Yeah, it's a great place to start, I think. With the reevaluation of the Canadian dollar to the US dollar, Canada's now become probably, and especially Ontario's probably now become the number one, or arguably the number one jurisdiction in the world to develop a gold project. We still, in Canadian dollars, are looking at a gold price here of $1,500 plus in Canadian dollars as of today. Treasury Metals, we're headquartered in Toronto, as you mentioned. Our project is located in northern Ontario. It sits on the Trans-Canada Highway. One of the really good benefits that we have is we're located on the Trans-Canada Highway, and we enjoy some of the best infrastructure in Canada, if not the world. We're located 2 kilometres east of the small town of Dryden and very close to the provincial cities of Thunder Bay and the provincial capital of Winnipeg of Manitoba. So all the necessary infrastructure that is needed in terms of to bring a project like the Goliath project into production are available for us. We have ready hydro, electrical power on site. We have natural gas on site. We have roads available for us. We have a skilled workforce that's available for us, and that keep all that as we move forward will enable us to keep the capital expenditures to put this thing into production, or put this project into production, at a very minimum.
Well, Martin, what's been going on in the gold industry is that the majors are looking and investors are looking for high-grade assets with low costs and impressive economics. Could you talk to us about the Goliath economics? You had a PEA, and I know you're working on a feasibility study now. Talk to us about some of these economics and how you rank in terms of some of these other Canadian juniors.
Yeah, okay. We've seen a lot of M&A, and we've seen a lot of M&A happening in Canada, probably even more so in Ontario here. And I think what's happening now is, as the gold price recedes in US dollars but maintains its price in Canadian dollars, a lot of the major gold companies, a lot of the mid-tier gold companies are looking in Canada for good quality assets, high-grade assets. I believe the days of developing low-grade assets are probably beyond us. I think what you've got to look for now is good quality assets, as you mentioned, that have good grade, high grade, and that's what we have at Goliath, that's what we have at Treasury. The Goliath Gold project, we're looking to put the project in production at a grade of around about 3 grams per tonne. And if we can do that and keep the grade up and build this project at 3 grams a tonne, this thing will be very, very economical. It will be very, very profitable. We know that from the PEA that we completed, as you mentioned, in 2012. The project itself, we've completed over the past couple of years somewhere in around about 150 to 180,000 meters of infill drilling. So it's at the stage where all the necessary drilling has been completed on the project. We then put together a new resource, which we put out to the market in September of this year. That resource shows us that we have around about the 1.4, 1.5 in total million ounces on the project, and that there's more to the point 1.1 to 1.2 million ounces in what we call the indicated categories, which is an increase in confidence in terms of those ounces. So we're moving forward. We now have to take that resource. We have to put some engineering numbers around it, and that's what we're doing. That's what the feasibility will do over the next 5 or 6 months. That feasibility should kick off. That mine feasibility should kick off before Christmas in the next month or two. We're just lining up contractors and consultants at the moment, and going and putting out tenders and those sorts of things. It's expected to take perhaps 5 to 6 months to complete the feasibility, and on the back of that, we will then be able to make a production decision on the project. So we're very, very close. At the same time, as you mentioned before, we've been moving through the permitting process. We completed on the project, already completed to date, an environmental impact statement. We submitted that to the government in May of this year, and we've had our community meetings, we've had our First Nations meetings, we've had the federal government technical review. We've had all those comments and all those comments back to us now to the company, and the company is in a position to go forward and mitigate any concerns that may have come from that initial filing of the environmental impact statement. So we're busy doing that. We're busy putting that together as well. That should take the next 4 to 5 months. Also, they'll go back to the government sometime in the first quarter of next year, and will take hopefully another 6 or 7 months. And at the end of that process, we should be in a position to receive mine permits. So everything going according to plan, sometime in the middle towards the end of 2016, Treasury Metals should be in receipt of a full mine feasibility along with full mine permits.
And that's not what many junior miners are able to say. So you're in a very strong position that you're advanced like this and can be in production, gold production by 2017. And what's so impressive to me as an investor is that you're under 87 million shares fully diluted outstanding, and you've been able to raise this capital and not blow out your base. So that's quite impressive. I was wondering if you could discuss how you were able to get to this advanced stage with minimizing shareholder dilution.
Yeah, okay. At Treasury Metals, at TML, we've been doing exactly what a junior gold development company should be doing, and that's developing the project. There's certain stages that we've been working through, and as I mentioned before, we've completed the drilling. We've then applied to the government for permits. These are all milestones that we've completed over the past 12 months to 2 years. We then completed a new resource estimate, and posted that to the public in September. And the next thing to do on the project, as I mentioned, is a feasibility, complete that, and then finally complete the permitting process. So these are all milestones, and what we do at Treasury Metals is we tend to go to market, or we tend to go to market and do equity raisings, just enough money or sufficient money in order to complete the next milestone. So over the past 2 to 3 years, as we've been completing our milestones and developing the company and developing the project along its timeline, we've perhaps raised somewhere in the vicinity of $25 to $30 million, the bulk of that money being raised through equity placements. But we've also been fortunate enough to be able to raise $5 or $6 million through a debt facility that was put in place, say 18 months to 2 years ago, and that was put in place by a company by a mining merchant bank called R&B Resources. So that money, that $5 6 million, which enabled us to complete, for example, the environmental impact statement, that saved us having to issue stock in a poor gold market. So it actually kept the amount of shares on issue to a very minimum. At TML, we are very, very serious about the amount of stock that we put on issue, as we're all owners, all the managers, all the insiders, the directors, myself. We are significant shareholders of the company, so we don't go out and do major equity dilution or major equity raisings, which will dilute the company on an equity basis. We tend to raise money, as I mentioned before, do equity raises in order to achieve the next milestone. and that's the way we've kept the shares to a minimum to what it is today, 75 to 80 million shares outstanding.
And continuing to outperform the index such as the GDXJ or the TSX Gold Index. So that's quite impressive, Martin. So thank you so much.
I think on that,
yeah.
If I could just say on that, Chad, yeah, I think on that, what we have done at TML, what we try to do is we try to de-risk the project. And I think in the gold mining business and the exploration development business, it's all about de-risking your project as you go forward now. And that's really what we've been trying to do at every stage of the game here. Raise a bit of money, de-risk the project. And I think that's really worked for us, and I think you've seen that reflected in the share price. And the share price has come along and increased in value every time we've published another project or another stage of de-risking the project.
And you're at an exciting stage now with the feasibility study getting hopefully going to get started soon, and the permits, some news with permitting. So thank you so much, Martin, for being here with us today, for giving us an introduction into Treasury metals, which can be traded as TML on the Toronto Stock Exchange.
Yeah, well, thanks for your time too, Jeff. Wonderful, and I look forward to talking to you again in 5 or 6 months.